In the last 100 years, the world has seen four major economic events: the Great Depression of 1929, the Black Monday crash of 1987, the dot-com crash of 2000, and the financial crisis of 2008. Four events that shook the global economy. Do you know what's common among them? Two things. They all started in America, and they all had serious global implications. Now, the year is 2023, and history may be repeating itself. Two American banks have collapsed. Global banking stocks have nosedived, and the crisis is spreading, and it's all linked to the United States of America. Yesterday, we told you about a third American bank on the brink. Today, it has been rescued. We're talking about the First Republic Bank. Credit ratings agencies had rated this bank as junk, but now it's got a lifeline. America's biggest bank swung into action. 11 banks injected $30 billion, $30 billion. So First Republic has got a cash booster of $30 billion. Why did 11 banks rush to save it? Essentially to save themselves. You see, this was done to contain the panic, to prevent another bank from collapsing. That would have really battered investment sentiment. So First Republic had to be rescued, and it has been. But this is not a sustainable strategy. And the crisis is far from over. Global markets are still in turmoil, and Europe is blaming America for all of this. Regulators in the European Union are calling American officials incompetent. That's the word they used, incompetent. Let me show you a report. It has quotes from senior Eurozone officials. This includes former regulators and policy experts. And they're all angry about one thing: the way the mess at the Silicon Valley Bank was handled. Remember, this crisis began at Silicon Valley. Now, European regulators say the US response was a disaster. I have more quotes. And these are the terms that they've used: total and utter incompetence, very questionable, a disaster. And the last quote is scathing. From a financial stability perspective, they really killed a fly with a sledgehammer. They killed a fly with a sledgehammer, say the Europeans. What are the Europeans so angry about? The Silicon Valley Bank and how the US decided to cover all deposits. EU regulators believe this decision undermines the global regime. As of now, this criticism has not been conveyed officially, but the indictment is strong. Europe says America flouted norms and that American authorities tore up the global rule book. But it shouldn't be surprising, because this is not a first. The US does it all the time. It likes to dictate and set the rules and break them when they do not suit its purpose. But that's a conversation for another time. Coming back to the issue at hand, investors are still afraid. They don't know when this crisis will bottom out. The situation is unpredictable, and some experts say the US government's response is not helping.
The only part here that really makes me worried is that we know that every time the federal government gets involved with the economy, we've seen it in the housing market, we've seen it in bank bailouts, it completely blows any possible perception or risk analysis of what is or is not risky behavior completely out of the water.
And that's a genuine question. How far is the US government willing to go? Will it save every failing bank? How many more banks are in trouble? We don't have the exact number, but multiple banks could be short on cash. Last week, they borrowed about $300 billion. The US Federal Reserve gave out this money. This is America's central bank, the US Federal Reserve. And who borrowed these $300 billion? Nearly half of the amount went to two banks, Silicon Valley Bank and the Signature Bank. These are the two banks that failed last week. Now they've got $143 billion from the Federal Reserve. The money has gone into the holding companies of these banks, $143 billion. What about the rest? Which other banks have borrowed from the US Fed? We don't know yet. The US Fed did not identify the banks. Neither did it share a number, perhaps because it did not want to feed into the panic. You know, once you declare that such and such bank is in trouble and has been given a cash infusion, it sets off a chain reaction. Meanwhile, the government is trying to manage the narrative. Team Biden is sticking to its message. It insists that American banks remain strong. Yesterday, the US Treasury Secretary said the same to the lawmakers.
I can reassure the members of the committee that our banking system is sound and that Americans can feel confident that their deposits will be there when they need them. This week's actions demonstrate our resolute commitment to ensure that our financial system remains strong and that depositors' savings remain safe.
But are these assurances good enough? Just today, another American bank was pulled from the brink. So Washington's problem is not the money, it is the crisis of confidence. And it is hurting businesses across the world.